Welcome to our deep dive into the recent events surrounding Bank of America, one of the largest banks in the United States. We're going to be talking about some recent troubles that have been causing ripples in the banking sector, starting with Bank of America's unrealized losses. These losses, which amount to a staggering $136 billion, have caused a slight hit to the bank's stock. Now, these losses are unrealized, which means they are not actual losses and do not affect the bank's operating results. However, they do serve as a mirror, reflecting the wider issues plaguing the banking industry. The losses primarily stem from Bank of America holding a significant amount of low-yielding bonds on its balance sheet, resulting in floating losses. To mitigate these losses, Bank of America has implemented a strategy of transferring these loss-making bonds into its held-to-maturity, or HTM, portfolio. This move essentially pushes the losses off the bank's balance sheet. To give you an idea of the scale of this, imagine a mountain of money $603 billion high. That's the size of Bank of America's HTM portfolio. Despite the unrealized losses and the wider issues in the banking sector, it's important to note that Bank of America's accumulated other comprehensive loss of $22 billion is manageable and does not pose a significant risk to the bank's overall health. However, if these losses were to be recognized, it could lead to a drop in equity and necessitate the need for expensive sources of equity. In addition, the high interest rate environment is also impacting Bank of America's profitability. As its bond portfolio is structurally unprofitable, aggressive rate hiking has a destructive effect on the bank's profitability. While these losses are not real and do not affect operating results, they do reflect wider issues that are currently shaking the banking sector. Let's delve deeper into the challenges Bank of America is facing. One of the major hurdles is the high interest rate environment. You see, Bank of America holds a considerable amount of low-yielding bonds on its balance sheet. As interest rates rise, these bonds become less profitable, resulting in what we call floating losses. This situation has been exacerbated by aggressive rate hiking, which has a destructive effect on the bank's profitability. The bank has taken measures to manage these losses, such as transferring most of these loss-making bonds into its held-to-maturity portfolio. However, if these losses were to be recognized, it could lead to a drop in equity and the need for expensive sources of equity. Now let's talk about another elephant in the room, Bank of America's exposure to commercial real estate, or CRE. The bank has a significant amount of loans in this sector, and a high non-performing loan rate is a concern. Specifically, the commercial mortgage-backed securities, or CMBS market, is particularly problematic. Many loans in this market are unable to be refinanced, and with a significant amount of these loans set to mature in the coming years, the challenge is indeed significant. The impacts of these issues are not confined to Bank of America alone. Many regional banks are overexposed to the commercial real estate market, which means they could face similar problems if the market faces a downturn. It's important to remember that the banking sector is interconnected, so a problem for one can quickly become a problem for all. However, despite these challenges, Bank of America has historically been a strong performer with low valuations compared to its peers. This suggests that it has the potential to weather these storms and continue to provide value for its investors. With a significant amount of loans set to mature in the coming years, the commercial real estate market is indeed a challenge. But as we'll see in the next segment, it's not all doom and gloom. Stay tuned as we explore the silver lining in the midst of these challenges. Despite these challenges, it's not all doom and gloom for Bank of America. Let's shift our focus to the brighter side of the coin. Bank of America has historically low valuations compared to its peers. This suggests that it's a robust company with an untapped potential for recovery. While the unrealized losses and exposure to commercial real estate might seem daunting, it's important to remember that these are but a part of the larger picture. It's also worth mentioning that Bank of America was involved in federal stimulus programs, which led to operational losses. However, these programs were designed to support the economy during a tough time. It's a testament to the bank's commitment to the wider society, even if it means taking a short-term hit. It's this kind of resilience that sets Bank of America apart. Their ability to weather storms and pivot when necessary is a sign of a company that's built to last. So yes, the challenges are significant, but so is the potential for growth and recovery. While the road ahead may be rocky, Bank of America has shown resilience in the face of adversity. As we wrap up our analysis of Bank of America's recent events, it's clear that navigating the banking sector's current challenges requires agility and strategic foresight. We've delved into the bank's unrealized losses, a figure that rings in at a staggering $136 billion. These losses, while not affecting operating results, are indicative of wider issues within the sector. We also touched on the high interest rate environment and its impact on Bank of America's profitability. The aggressive rate hiking has a destructive effect on the bank's bottom line, making its bond portfolio structurally unprofitable. Lastly, we discussed the bank's exposure to commercial real estate, a sector that's poised on shaky ground with many loans set to mature in the coming years. Despite these challenges, let's not forget that Bank of America remains a formidable player, boasting historically low valuations compared to its peers. The banking sector's landscape is ever-changing, and it's crucial to stay updated. This is where we come in, providing you with the latest insights and analyses. Thank you for tuning in. Don't forget to subscribe to our channel for more insightful analyses of the financial world. Until next time, stay informed and stay ahead.